Global shifts, local impacts. We connect the dots so you don't have to. From the Biz News studios, welcome to Biz News Daybreak for Tuesday, the 17th of February, 2026. I'm Alec Hogg, and here's the context you need to win the day. US markets were closed last night to celebrate the birthday of its first president, George Washington. But there is still lots happening, including upping the ante in Iran. Here's the very latest from our partners at Bloomberg in New York.
The U.S. and Iran are set to hold talks today on Tehran's nuclear ambitions. President Trump told reporters he would be indirectly involved in those negotiations.
We'll see what can happen. It's been typically Iran's a very tough negotiator. They're good negotiators or bad negotiators. I would say they're bad negotiators because we could have had a deal instead of sending the B-2s in to knock out their nuclear potential, and we had to send the B-2s. I hope they're going to be more reasonable. They want to make a deal.
Now, the president has already threatened to strike the Islamic Republic unless it agrees to a deal curbing Tehran's nuclear program in exchange for sanctions relief. SpaceX and its wholly owned subsidiary XAI are competing in a secretive new Pentagon contest. The goal is to produce autonomous drone swarming technology. Now, initial voice commands would be translated into digital instructions with the capability of running multiple drones. This project will be done in phases, beginning with software development and progressing to real-life testing. The ultimate aim is to create technology used for offensive purposes. The path of U.S. interest rates will remain in focus after a tame reading last Friday on U.S. retail inflation. Markets are now fully pricing a Fed rate cut in July and the strong possibility of a rate cut in June. Meantime, AI disruption is rippling through markets. Here is Natalia Lipakina, head of EMEA strategy at JPMorgan.
I think for now, we're so much focused on what is happening in the tech sector because the disruption just happens so fast. The market just trying to figure out who will be the winner, who will be the loser. But if you look outside and think about how much the hyperscalers are spending, we're going to have 600 billion again this year. And that has positive impact on semis, on industrials, on utilities, on such a big portion of the market.
That is Natalia Lipakina from JPMorgan. U.S. markets will be back online today with plenty of earnings to consider in the week ahead. We have a preview from Bloomberg's Charlie Pellet.
Investors are looking beyond the headline and guidance numbers for clarity on AI capital investments. Mark Lucchini is Chief Investment Strategist at Janney Montgomery Scott. He's watching revenue.
Right now we're seeing not only estimates, obviously, as we're closing out confession season for the fourth quarter, continue to beat expectations. That's a pretty heady pace, not only on earnings, but revenues.
Among this week's most closely watched reports will be Walmart, also reporting tech names Palo Alto Networks, Analog Devices, and Cadence Design Systems. In New York, Charlie Pellet, Bloomberg Radio.
Finalizing your February tax planning? Jaltech's latest Section 12B solar investment offers taxpayers a tax deduction of up to 230%. In simple terms, for every rand invested, up to 1 rand can be deducted from your tax bill, while you continue to earn income from solar assets. This applies to both income tax and capital gains tax. Visit jaltech.co.za to find out more.
On the local political front, with John Steenhuisen's exit, the Democratic Alliance is standing at a massive fork in the road. Frans Cronje of the Common Sense Institute argues that this isn't just about a leadership swap. It's a perilous moment that could either launch the party into the 30% bracket by 2029 or sink its coalition prospects. Here's his take on the crucial decisions that are lying ahead.
The DA has made the decision on John, and Hill Lewis becomes the next leader, and it's a smooth, decent contest. No racial animosities or so on introduced or claims that it's now time for the party to transform itself. Why is it getting another white leader? When will it embrace BE? Or all of that. It's smoothly through. Miller knocks it out the park in Johannesburg. DA rivals the ANC in all the serious municipal districts in the country and does well. Foot and mouth disease is well handled because John Steenhuisen has done what I think is the right thing, give private actors real control over what's going on the ground. And the ANC elect someone other than Mr. Motsepe as its next leader. In that chain of events, you can have a 2029 election where the DA perhaps goes to 30-something. And maybe, let's make these two totally binary options, it might get more in the 30s than the ANC gets, which is also in the 30s, and it's a senior partner potentially in the government. And so the DA has come to, with the departure of John, to quite an important potential fork in the road here. And the decisions that it takes now and how it takes those and thinks through those decisions are going to determine that, you mustn't think of these things, I think, on the spur of the moment. You must know ahead of time exactly what you're going to do and how you're going to do it to realize the upsides and avoid the downsides. And it's actually quite a perilous moment that has arrived for the DA.
The rand is edged back above 16 against the US dollar, and this on a gold price that is edged slightly lower than $5,000 an ounce. You know the story there. On the local news front, though, the aggressive privatization of RMB Holdings is gathering pace. After unbundling its assets in First Rand Discovery and Momentum in 2020, RMBH was left with a single asset, 27.5% of Atterbury Property Holdings. That's the owner of the iconic Mall of Africa. In a SENS announcement yesterday, Atbid, a consortium backed by property giant Atterbury and the founders of WeBuyCars, Van and Dirk van der Walt, revealed that it has been active in the market. Between Tuesday and Thursday last week, the group snapped up another 44 million shares at the offer price of 47 cents. This buying spree has pushed their total stake in RMBH to just over 32%. For the shareholders who remain, the message is clear. The Van der Walt brothers and Atterbury are moving decisively to delist the former financial giant, and 47 cents is the firm exit price. Patrice Motsepe is stepping back from the day-to-day running of African Rainbow Minerals. To comply with new JSE rules that now ban executive chairman, Motsepe has retired as an employee but will remain on the board as non-executive chair. This was announced on the Stock Exchange News Service yesterday. Stepping up to the operational plate is Jacques van der Bijl, a long-time engineer who takes over as the new chief operating officer. It's a major governance shift for the mining giant, officially ending Motsepe's 20-year reign as an executive. No doubt the political rumor mill will seize upon the news to support an idea that Motsepe is readying himself to become president of the ANC and potentially the country when his brother-in-law Cyril Ramaphosa steps down next year. The sad, slow collapse of Tongaat Hulett has reached its final chapter. The company released its January business rescue update on SENS yesterday, its 37th monthly report since the crisis began in 2022. But this specific report carries a heavy finality. It is the first one issued since the practitioners officially applied for court liquidation on February the 12th, that's last Thursday. After 3 years of the business rescuers fighting to save the 130-year-old sugar giant, they have now conceded defeat. For shareholders who have lost everything, the latest report, now available on the Tongaat website, serves less as a progress update and more as a chronicle of the end of a one-time KZN industrial giant.
Cody from Paul has sold multiple vehicles to WeBuyCars. Suspicious? I think so.
Is that a crime?
No. Where are you getting the cars?
I buy them and I sell them at the spot like a normal person.
Okay.
No, man, I'm just an accounting student. I know a good deal when I see one.
That's Excel meant. What's more stressful, tax season or selling a car at WeBuyCars?
Tax season, obviously.
WeBuyCars, the easiest way to sell your car by far.
happier news now. Telkom's pivot to a data-first strategy is paying off, with the shares jumping 6% yesterday on information in a trading update that was released on the Stock Exchange News Service. Big news, the group reported that data revenue jumped nearly 10%, and it now accounts for a massive 60% of total income. Its OpenServe division is turning out to be the superstar that some predicted. In terms of numbers, the mobile division is Telkom's star performer. It surged past the 25 million subscriber mark. However, it's a tale of two cities. While mobile and fiber grew, the IT division, BCX, remains under pressure, with revenue there sliding 9%. Despite that drag, aggressive cost-cutting helped the group's EBITDA rise 8.5%, signaling that Eskom is becoming a leaner, more profitable operation. AECI's shares did even better. On news of its massive turnaround, they jumped 8%. In a trading update released yesterday, the explosives and chemicals giant flagged that headline earnings per share will surge between 43 and 58% for the year ended December 2025. While the core mining division improved margins to boost profit, the real story is the balance sheet. By selling off non-core businesses, AECI has slashed its net debt from, listen to this, nearly 3.8 billion rand down to just 460 million rand. With its gearing now sitting at a tiny 5%, the group has successfully transformed itself into a far leaner, low-debt operation. And we close off on the local news front with more good news, this time from construction group Stefanuti Stocks, whose share price rose 4% yesterday after a voluntary trading update on SENS disclosed its order book has swelled to 15.3 billion rand, up from 13.2 billion rand in August. Beyond the secured work, the group is eyeing 12.5 billion rand in short-term potential awards. Crucially, the balance sheet is also healing. Its loan with Standard Bank has been slashed from 850 million down to just 250 million, which will cut Stefanuti Stocks' interest costs by 70% next year. The weighing machine has spoken. Cy Jacobs and Sean Pesh dominated the 2026 Raging Bull Awards, which were announced late last week. They prove smart money wins. Now come and hear these market masters live. Join us at BNC 8 in Hermanus, March the 10th to the 12th, or the 13th if you're going to join us for golf. Tickets are going fast. Book yours right now at biznews.com. Next up is an excellent clip from the FT News briefing where host Victoria Craig engaged with our partner's US markets correspondent George Steer to discuss the recent chaos in financial markets triggered by a new AI tool from Anthropic. A widespread sell-off hit stocks in industries ranging from legal and publishing to logistics. George explains how fears that AI would disrupt traditional sectors caused investors to flee, even affecting trucking companies, after an obscure white paper suggested AI could significantly boost efficiency without human drivers.
We've all been told the rise of artificial intelligence will make our lives easier, and that might be true in some ways. But for financial markets, the threat of AI on pretty much every industry under the sun has caused chaos recently. Seemingly indiscriminate sell-offs have wiped billions of dollars off stocks in sectors from wealth management to insurance brokers and property services. So what's causing all the consternation, and is there any relief in sight? George Steer is our U.S. markets correspondent, and he's been following Wall Street's wild swings. Just give us a taste of what's happening out there in the market.
The sell-off began 2 weeks ago when Anthropic, the AI startup, released some new tools to help boost the productivity of workers in the legal and publishing professions. Investors didn't like this. The sell-off intensified and started to sweep up some of the private equity giants that have piled into software over the last 10, 15 years. Even trucking companies were hit after a logistics company released an AI tool that would supposedly boost freight volumes. We've seen publishing companies sell off, FinServe, insurance brokers. Any company that kind of aggregates public information has been hit.
So some of these moves, they do make sense, but others are just bizarre. You mentioned the trucking company, and I think that's such an interesting example of how investors have just had this knee-jerk reaction. Walk us through that.
So a company called Algorithm Holdings, which is based in Florida, they're a tiny company. They're valued at something like $6 million. They trade on the NASDAQ. They released a white paper basically arguing that a company that they own in India, a logistics company, had developed an AI tool that meant its trucking customers could scale up their volumes by something like 400% without needing to hire any extra people. It's always hard in markets to attribute a price swing to something specific, but it looks like this white paper ended up triggering a massive sell-off across global transport stocks like airlines, freight forwarders, the Dow Jones Transport Index. I think it suffered its worst day since last April's Liberation Day tariffs.
Wow.
It was a crazy reaction to an incremental study self-published by a company that just a few years ago was selling karaoke equipment to Walmart.
So if the market reaction was based on this one white paper that this company nobody knew about a few days ago put out, how did investors find it?
Yeah, there's a kind of irony to the fact that the AI narrative is so dominant in the market right now. It's all investors want to talk about, even if it's what they currently want to avoid. And at the same time, buying and selling in the market of stocks is dominated massively by ultra-fast proprietary trading firms that use complex models to basically comb through the internet for potentially market-moving signals. So this AI paper was probably picked up by one such strategy. Others spot it. Momentum feeds momentum, and the sell-off kind of feeds on itself. AI driving AI.
Incredible. I want to talk about what investors are doing because you've written about this anything but tech trade. Are they trying to protect themselves really against all of this volatility by just moving into something different?
So I think investors had been maybe looking for an excuse to trim their exposure to some of this tech trade. And a lot of the kind of, the supermarkets, the materials companies, chemicals groups, anything cyclical, which is to say tied to the strength of the economy. A lot of those companies that had been kind of underloved for a long time have benefited from that rotation.
We end off with a heartwarming piece. It's not every day you see the South African flag flying high in the Italian Alps when international competitors get together. But for 17-year-old Thomas Ware, representing the green and gold at the Winter Olympics in Milano Cortina is a dream come true. Thomas might have been born in Switzerland, but his heart is 100% South African, inherited from his father. We caught up with the teen skiing sensation to hear about the surreal moment when he led the South African team out at the opening ceremony. And the one essential local snack he makes sure to smuggle onto the slopes. No prizes for guessing what that might be.
That opening ceremony was so nice to see the South African flag there. How did it feel for you to walk as 5 South African athletes?
Yeah, it was just like so awesome to just carry the flag there on on the big stage. It's just incredible feeling. Yeah, we were 2 athletes in Livigno where we were marching, and then there was 3 other athletes in 2 other places.
What's been the most surreal moment so far?
I think definitely the opening ceremony was something special. Just marching, carrying your flag, you actually feel like you're representing your country. So yeah, that was probably the greatest moment yet.
Who have you bumped into the village that made you think, okay, is this real?
Yeah, well, I've met a few, like very good skiers, like exchanging pins and stuff. It was very cool. So yeah, I've met like Ruan Erasmus from America, a few French guys, and yeah, it was really cool speaking to them.
So where do you see skiing going over the next few years?
For now, I'm still like kind of doing a dual career, so I'm still into a lot of school. So yeah, I'll see what happens next, how it goes with school, and then I'll have to choose between skiing and school. But yeah, for now, it's still a bit of both.
Is there anything you would like South Africans back home to know about you? What about that biltong that we've seen popping up?
Yeah, that's definitely my favorite food ever. Like the one thing I probably miss from going to South Africa, just being able to walk in the supermarket, get some biltong. But yeah, definitely the best.
Do you keep that for a bit of energy in between?
Yeah, well, every time I go there, I try to stack up the biltong, get it back here and keep it. But yes, best snack for a race.
What's the one piece of advice you pass on to someone your age who's scared to try something difficult?
Yeah, I would just say like go try these type of things. Just try, because it can just become something you become so passionate about. So yeah, just even if it feels like a bit weird to try these things, just go out there, try, and it's just the best.
And does your dad braai in the snow?
Yeah, we love to braai, so yeah, we do it as much as we can.
17-year-old Thomas Ware handles himself well, doesn't he? He was talking to my colleague Linda van Tilburg. You can get the full interview by going to biznews.com. And now you have the edge. For the full interviews and the details behind these stories, head over to biznews.com. I'm Alec Hogg. Thank you for starting your morning with us. Now go and seize the day.